Good morning, ladies and gentlemen, and welcome to this meeting. My name is Céline Vandrestenier. I'm the head of CNEA's Operational Finance Unit. And to start with, I would like to thank you for being here. We have around 800 registered participants online, which is really important, as without you, this event would not be successful. The purpose of this meeting is to complement the information provided during the welcome meeting that took place on the 3rd and 4th of October. We will provide you further information on the clauses of the grant agreement related to financial and contractual matters. We will cover payments and reportings with, of course, eligibility of the cost, amendments, suspensions, and terminations. And you should therefore get the appropriate information to adequately implement your action and ensure correct reporting in view of receiving the expected funding. There will be also time for questions and answers, and we will be using Slido for this purpose. And I was told that the same QR code will be used than in the past session. You will receive more information in any case on this point at a later stage. What's on the agenda today? Well, first of all, we start with the model grant agreement and the financial issues in detail. And this part will be presented by Licinia Pereira, who is financial manager working in the life sector in my unit. She will outline the most important financial aspects of the grant agreement. And the presentation will be followed by a Q&A session with the life finance head of sector in my unit as well, Anne Vermalen. Then after a 15-minute break around 11:45, the meeting will resume, focus on amendments, suspensions, terminations. And these aspects will be presented by Nadia Lamhadas, who is project advisor in the unit Nature Environment. It will be also supported by Licinia Pereira, who will join again. Finally, this will be also followed by a Q&A session. And eventually, the meeting will close with Hans Hein, around 12:55. Hans is head of unit for climate and clean energy transition. And now I think it's high time to pass the floor to Licinia. I wish you to enjoy the event. Thank you very much.
So thank you very much, Céline, for that introduction. I'll be, if I could have the presentation. Thank you. Really welcome to all of you that have just had your grant agreement approved and signed, and all those that have joined us also that had their grant agreement signed last year. So this is really covering the life grants 2021-2022. So again, congratulations, and also hope that your action is going well. Next slide, please. So before we go into details, I wanted to let you know that this presentation is really taking a practical approach. We want to give you as much information as possible so that you implement well your grant agreement and that you receive the expected EU contribution foreseen in your grant. So this is complementary to the presentation that was given on the 3rd of October. We will be looking at reporting, the recording requirements and other rules. We will be looking at further pre-financing requests, interim and final payment requests. We've had some of them already. And we will be looking into some costs in more detail. So the so-called a little bit problematic costs, and also providing you with some calculation examples. And hopefully you will see a little bit how you should be doing these calculations. We will also be sharing some lessons learned because, like I said, we've had already some final payment requests, mostly from NGOs, but not exclusively from NGOs, from operating grants. And we've also had some further pre-financing requests, mostly from the Life 21 set actions, but not exclusively as well. And before I proceed, a very important notice, all this will be applicable for all beneficiaries and the affiliated entities as well. Next slide, please. So here, you know this slide very well so far. I think all the reference documents from the portal, but this time we are adding also from our website. So you start with the usual reference documents, legislation, work program, the call documents, grant agreements, guidance, and templates, okay? Especially now important for your reporting. The model grant agreement, the annotated grant agreement, which is still in draft. There is a new version from April this year, and here in the Commission, we are working on a new version. Hopefully by end of this year or next year, there should be a revised version. We are now making contributions. There's a consultation going on. Then also an important link is rules for legal entity validation and financial capacity assessment in case you have new beneficiaries, and in case also if you're going to be if there's going to be a change in the coordinator and you want to check your financial capacity assessment, you can go here to the link and you can do also a self-assessment. Also new, how to complete your financial statement. And in addition here, we have introduced here two links to documents that we are providing as guidelines and templates for reporting. And I will be mentioning this later on. Next slide, please. So what do you need to do from day one to ensure that you are correctly implementing your grant agreement and that your costs will be eligible? So please have a look at the data sheet in your grant agreement. These are the first pages that have a summary of your grant agreement, and check which costs are eligible. Please keep this in mind. Please use adequate tools and procedures to track your costs. Very basic, you need to attribute a project code for the cost allocation in your accounting system. Please keep records of the costs incurred in the different budget categories. We suggest, for example, that you keep an Excel file with all the costs that you have incurred, and later on you will see how useful this will be. You need to ensure that the time worked on the project is a record. Keep an appropriate level of costs recording, track of the direct cost and respective supporting documents. And please, very important, check and follow your usual accounting practices. This is really important. Usual accounting practices, including your internal rules on reimbursement and travel and subsistence of costs and depreciation. Before we go to the next slide, I realized that I forgot to mention something on the Slido. So you know that we have two sessions now, this financial one, and later on we will have one on amendment, suspensions and terminations. So in order to be able to address your questions appropriately, please ask only now in Slido the financial questions, and later on, if you have questions on amendments, suspensions and terminations, then introduce those questions later on. Thank you. So we can go back now to the presentation. Thank you. Next slide. Oops, sorry. We need to go back to my PowerPoint presentation. Thank you. Next slide, please. Oops. So definitely we are experiencing some technical issues. Thank you. There you go. So another recommendation is please follow your internal procurement procedures. If not available, please make sure that you comply with best value for money, lowest price, and no conflict of interest. So if this is particularly if you are a private beneficiary, if you are a contracting authority or entity within the meaning of the EU directives on public procurement, so more or less public entity, you need to comply with national and European procurement rules. And here we indicate the article in the grant agreement that will provide you for more guidance. Please also include the Life Funding logo or Natura 2000. Here we also provide you with the article on this. This is mainly for publications you might have, events, so the logo needs to be visible. If you are purchasing land, please enter it into the database. And if you are an affiliated entity working on the project, please make sure that you are in the grant agreement and that you are declaring your costs in your own financial statements. And here we give you one of the first additional guidances from our side, which is the financial report checklist for beneficiaries. It's on our website. This is the link. And on the next slide, please. Here is a preview of what this checklist is. So here you have on the left side personal costs. Then the next column is the rules that you need to comply with, the reference documents and articles, and then some comments and tips from our side. So this is done for all the cost categories, and hopefully it will be an additional guidance, useful additional guidance for you. Next slide, please. So here we go into record keeping, Article 20, and in the annotated grant agreement, the revised version of April 2023, there's some more additional guidance, so please have a look. So basically for the actual costs, you need to keep adequate records, supporting documents that will prove that the costs that you have declared have been really incurred. These are like subcontracting documents, contracts, invoicing, and of course the accounting records. This is of course according to your usual accounting and internal control procedures, and this should enable us, and of course you as well, to reconcile the amounts that you have declared with the amounts that are recorded in your accounts and that you can see in your supporting documents. For the flat rate is not per se necessary, but of course you need to have adequate records and supporting documents to prove the eligibility of the cost and the contribution to which this flat rate is applied. For unit costs, and here we will be looking at the SME and the volunteer unit costs, you need to keep adequate records and supporting documents to prove mainly the number of units that you have declared. For personal costs, and here we will be looking at this in a minute, you need to keep adequate time registration. And of course, you need to make sure that the personal costs are charged to the correct sub-cost category. And here we'll be looking at it later as well. Next slide, please. So here, if you look at the personal costs, this is already an indication of a big change between the Life 14-20 and the Life 21-27, so the new program. Because here you see the template of a monthly registration. This template you will find in the portal, and this is a recommendation from our side. So you would need to fill this in with the project acronyms, all the data, and then you see at the bottom January, and then you would indicate the days worked. For the work packages, you don't need to indicate here the exact number, although this information you will need later on, but you can here put, for example, 20% work package 2, 50% work package 5, and so on. We would recommend that, of course, this is followed up in a proper manner, meaning date and signature of the person, and also name and signature of the supervisor, and that this is done, of course, monthly. So this is not compulsory, but this is a recommendation from our side. Next slide. This would be the alternative method for time registration of your personnel. So if you have another reliable time recording system in place, this is okay. And we understand if you have also actions from the previous life program, so Life 14-20, this is a way of keeping both. So of course you can maintain this as long as you have the minimum data required. So timesheets for each person carrying out the action and should indicate the time spent on the specific project, and of course match with your accounting records and supporting documentation. They should be validated and signed in a timely manner by the staff and the superior. Once again, we recommend once a month. So it's not mandatory to use the template from the portal, the one we have just seen. However, of course, the information that is available there should also be available in this other possible recording system. So in both methods, you need to keep the corresponding supporting documentation, employment contracts, labor agreements, compliance with the national law, labor and social security contributions, the pay slips, time records, bank statements showing salary payments, etc. Very important, only the costs for the personnel assigned to the action can be eligible. And of course, this is also applicable for everyone, including those working full-time. And then the allocation of the work packages can be done either through time declaration or through a specific allocation methodology that you might have in place. Next slide, please. So here we go into reporting. You know that there is continuous reporting available in the system. Here we are talking about the periodic reporting, which is the one connected with the payment claims. So here you will have to submit technical reports and financial statements, including the user resources. And the reporting periods are prescribed in the data sheet. Normally they're due 60 days after the end of the reporting period. And the technical report that you will submit also includes some financial, more financial aspects, such as the financial support to third parties and the budget. You will need to download the template, fill it in, and then re-upload it in the system. And of course, the system will open the reporting session when the reporting period is due. Next slide, please. Next, yes, thank you. So here I will be focusing on the additional pre-financing. So the additional pre-financings are applicable for most call, except the strategic projects and some cascading grants. So here we are not approving the costs. We are providing you with another cash flow, another advance payment. So as such, at a financial level, this is a little bit lighter, so there is no financial report to be requested. You will only need to introduce a statement of the use of the previous financing, pre-financing payment, and this you will be indicating in the system. So there's no template for this. And here what you will need to indicate, I will be coming back to that in a minute, is the amount of EU contribution, not the costs. Also, there is this minimum 70% consumption on the previous pre-financing, otherwise there might be a reduction on the further pre-financing to be given. And this is, if this will be the case, then you might consider amending your reporting period. I will come back to that later. So, like I said, there are no costs that are accepted at this stage, and we will be doing some ex-ante checks, and this with the aim to provide you with some feedback on any issues that we might detect, and that we will help you in enabling you to provide a correct reporting and avoid any rejection, of course, at a final payment stage. So here we will be looking at, for example, the calculation of your staff costs, some procurement. Perhaps if you reach a certain threshold, it might not be applicable to all beneficiaries if the thresholds are not reached, etc. So if you are requested to provide with some information, please submit us an organized zip folder with information or supporting documents per partner, and where relevant, although only if requested, your own calculation sheets. So very important, don't burden yourself with sending us documents which we were not be requesting. So please only stick to exactly what is requested to you. If these documents or information are not provided, or if they are correct, then we will be doing the appropriate checks at the next periodic reporting. So either a further additional pre-financing or at the final payment. Next slide, please. Next slide, please. Oh, thank you. So here is an example of one of the documents that we will be requesting, the use of resources. So here you have to indicate the staff effort, so the total person's month's budget and what was actually incurred per work package, indicating then the total eligible costs budgeted for your action. This you can see in your Annex 2. And then on the right column there, you will see actual eligible costs for the reporting period. So you will be indicating all the costs that have been incurred for this reporting period per beneficiary. And then at the bottom, by indicating your co-funding rate, you will see there in green the amount of EU funding incurred. And it is this amount that you need to introduce in the system when you will be requested to indicate the amount of previous pre-financing that has been consumed. So we hope that with this table, it will help you indicating you what you need to fill in the system. Next slide, please. Next slide, please. Okay, thank you. So we mentioned that there is this threshold of 70%. So what does this mean? It means that if you have consumed less than 70% of your previous pre-financing, we will be reducing this difference for the pre-financing that you are requesting then at that time. So what you need to do, like I said, is you need to check what were the costs eligible, incurred. This was the previous table, the right column. You will convert into EU funding by indicating the co-funding rate. And then you will indicate the amount which was consumed, so the EU contribution. So we have here an example. So on the left column in yellow, we have an example of an action where the co-funding rate is 60%. The costs which were foreseen in the grant agreement, 1,200,000. If you apply then the percentage, it means that the EU contribution is 720,000. Normally, the first pre-financing is 30% of the grant agreement. That means
216,000 euros. So if you apply the 70%, microphone is off. Sorry, microphone is off.
is it on?
Yes, Ilsinia, it's working.
Thank you. Thank you. Sorry for all these technical issues today. So as I was saying, so you have received normally, in this case, 216,000 as your first pre-financing. If we take 70% of that, that means that the threshold that we will be taking as reference is 151,200. Okay, this is the reference to take. Then what will be foreseen in your action, or in this particular example, is 50%, unless you have 3 reporting periods and then it's 25 and 25. But in this case, it's 50%. So you have foreseen 360,000 to be received on this ongoing additional pre-financing request. Then we have 2 case scenarios. So the scenario 1, you have incurred 320,000 in costs. If you apply the co-funding percentage of 60%, that means that you have incurred 192,000. This is again the amount that you need to introduce in the system, okay? So as 192,000 is superior to 151,200, we will be paying you the fully amount foreseen for your pre-financing too, 360,000. So here there is no reduction, okay? In the case scenario 2, you have 160,000 costs incurred, multiplying by the co-funding percentage of 60%, you have incurred 96,000 in EU contribution. So this is lower than 151,200. So here we will be applying a reduction. The reduction is the difference between 151,200 and 96,000. In this case is 55,200. And this difference we will be deducting from the pre-financing to foreseen, which is 360,000. So in this case scenario 2, you would be receiving not 360,000, but 304,800 euros. I hope this is clear. If not, please put a question in the Slido. Thank you. Next slide. Next slide, please. Next slide, please. Thank you.
Actually, Licinia, there is a delay. We see the next slide and you don't see it. Just for you to know. So next slide is coming quicker for us than for you. So,
okay, sorry for that. Sorry for that. Okay, thank you. Thank you, Nadia. Okay, here the interim and final payments. So the interim and final payments are different than pre-financings because there we accept costs. They're not an advancement of cash cash flow of cash for you. These are payments where we are looking at the eligibility of the costs and we will be accepting or not. So for interim, they exist in the SIP and SNAP, so the strategic actions and some cascading grants. And of course, all the actions have final payments. So in this case, you will be requested to submit financial statements, so individual and consolidated, and please, for all the beneficiaries and affiliated entities. So here, of course, you will be indicating the costs and any revenues that you may have of the action. There is a part in the report that you will be requested to submit where you'll be indicating the use of resources. So here you will not have to declare all the costs, but for the purchase costs, where the amount is higher than 15% of the personnel costs, you will have to indicate this, this amount down to the 15th threshold, starting with the most expensive cost item. So don't be alarmed. I will be giving you some examples later on. It's just for you to keep in mind purchase costs 15% in relation to the personal costs. Then you will be needing to submit a certificate on the financial statement. If the EU funding is equal or higher than 500,000 euros, this is per beneficiary and affiliated entity. For the NGOs, the amount, the threshold is 100,000. Please always use the template published on the portal. Okay, and if your action has interim payments, the CFS must be submitted once the threshold is reached. We have sent on this aspect a circular note in June for your information. What ex-ante checks will we be doing? We will be doing some during the assessment of the report. So we might be asking some from additional information on supporting documents, particularly if there were issues which were detected in the previous payment or during the implementation of the action, and also depending on some thresholds on some cost categories, for example, procurement, and of course, personal costs. Please pay attention to these requests and address them properly. Provide us with the adequate information and documentation, as the non-reception of this information or documentation requested might lead to a cost rejection. Next slide, please. So I don't see the next slide, but I suppose you see it. So let me just, okay. So this is just the template on the report of use of resources, where you see here, I mean, this is just an example, but you see here in the middle, purchase costs, and you see here the indication on the 15% in relation to the personal costs. And this is then applicable for these cost categories. For example, here starting with travel and subsistence, where you will be requested to indicate the cost, the category, which work package it is referring to, was it foreseen or not, some explanations, and then the cost. And here at the bottom, you will see the template, the link to this template. Next slide, please. So here, this is what I was referring to, the use of resources with some examples. So for example, let's take that you have your personal costs incurred, not budgeted in this time, incurred, of 200,000. So what is the threshold that you need to be looking at is 30,000. So 50% of these 200,000. So if we take the scenario 1, where you have purchase costs, and again, to indicate that purchase costs include travel and subsistence, equipment, other goods, works, and services. So if you are declaring that you have incurred 10,000, well, you can clearly see that 10,000 is lower than 30,000. So you will not have to fill in this information in the user resources section. Case scenario 2, you have incurred 50,000 in purchase costs. So here we see that 50,000 is higher than 30,000. So you are going above the threshold. So what do you need to do next? You need to see the difference between these two, 50,000 and 30,000. The difference is 20,000. So you will need to indicate the costs covering this amount. You will start with the most expensive down to the 15% threshold. For example, you may indicate an audit report, 9,000, a dissemination campaign, 7,000, conference catering and rental of venue, 5,000. Sorry. So if you add all these up, you come to an amount of 21,000. So this 21,000 is superior to 20,000. So you have covered this difference. So you can stop here. You do not need to indicate further costs. And here we come back to the usefulness of using an Excel sheet to keep track of all the costs that you have incurred so far. Very quickly you see which is the highest cost and in which category it is. So we really recommend that you keep track, for example, with an Excel table, but it might be another one, of the costs that you have incurred. Next slide, please. So here we have what to do in terms of currency. So there's two possibilities. If you have your accountancy in euros, well, then just continue using your usual accounting practices when you have incurred costs in another currency and you need to convert them into euro. The other possibility, if you have your accountancy in which is not in euro, so you are located either in Poland, Denmark, for example, then you must convert your costs into euros using the average of the daily exchange rate, which is published here on the ECB website. You have here the link, and on the next slide, I'll be giving you an example. Regarding the language, it's normally the language of the agreement, so English. If, however, you agree with your project officer that some reports or a deliverable or something will have to be provided in your language or not in English, then please confirm with the PA. And of course, if this is allowed, then the translation costs will be considered eligible. Just the last thing is the financial statements are signed in the system, so no longer needed to sign them separately. Everything is submitted through the portal, through the system, so you will not have to send anything separately. Next slide, please. So this is an example of a conversion from the national currency. Here I've taken the Danish krona. So you will need first to see what is your reporting period. Here I put the first 11 months of 2022. You go to the website, you select Danish krona, you indicate that it's from Danish krona versus to euros. This is important, not from euros to Danish krona. You indicate the period, and here in the center right, you see here highlighted in yellow the daily average rate, which is 0.13 and so forth. So you take your costs incurred, 20,000 Danish krona, you multiply it by this average rate, and this is then the cost that you will need to declare to us, 2,000 euros, 688.26. Okay, next slide, please. So here we want to already share with you some of the lessons learned so far with the final payments and the additional pre-financings that we have received so far. Regarding the additional pre-financing requests, we have seen that some of the beneficiaries have not indicated the correct figure in the system, so they have indicated the costs instead of EU contribution. So please remember, when you use the user resources table, fill it in, and then at the bottom, the green part will indicate to you the EU contribution. Basically, you take the costs, you multiply by the co-funding rate, and you obtain the EU contribution. So this is one of the lessons that we wanted to check with you. And also, with the final payments, we have noticed that in many cases, the beneficiaries were not accurately calculating or reporting the personal costs. And here we really strongly recommend that you go into the annotated grant agreement. We know it's a long document, but it contains really valuable information, examples, interpretations on the different points that you need to take into consideration. And this is particularly important for personal costs. And why? Because in some slides, I'll be showing you that the method for calculation your personal costs has really changed in relation to the Life Legacy, so the Life 1420 program. And you really need to take the time to go and see what has changed and apply it to your Life 21-27 program. So first of all, please correctly calculate your actual costs incurred for the reporting period. So what is my reporting period? It's from, I mean, if we take now the currency example, it's the first 11 months of 2022. You take all the costs for this employee and you add them up, and if they are accruals of the salary, please always correctly calculate it to the reporting period, and if necessary, you might need to do a pro rata. Okay. Please calculate correctly the daily rate. We will be looking into that in a minute. And the number of daily equivalents declarable. These need to be rounded either to 0 or to 0.5. Okay. Another factor, another issue that we have looked as some beneficiaries have not properly indicating the working time factor. So 1 for full-time, part-time, if it's 50% is 0.5. Okay. Then a novelty as well in the program, so something that has changed in relation to the past, is that sick and parental leave days are not to be deducted from the 215 days. These are the maximal declarable days to be used. Please make sure that you allocate your staff directly to the action, and there is a trace within your systems, your time recording systems, to this. And this includes everyone, including those that are working full-time. Please make sure that your time registration is dated and signed. We really recommend that it's done at least once a month by the person, the employee, and the supervisor. And this is applicable to all those working in the action, again, including those that are working full-time. Now I make reference to another further guidance that we have developed specifically for you, which is a calculation sheet. This is available on our website. The link is here. And we started off with just the first category, the most common, the A1. And now we have it available for all staff categories. This will be available very soon. We are also looking into developing a further guidance on how you could use this table correctly. I don't know, maybe in the form of a video or a tutorial, something like that. We will keep you posted and we will then put it on our website as well. So please check it regularly. Another guidance that we have developed, and it will be also available soon, is the frequent wearers. So we will be indicating what have we seen as an error quite a few times and how you can correct it. So this further guidance will be available very soon. Next slide, please. So here we are looking into the direct costs, all the types of category of costs that you have. Direct costs are those costs which are directly connected to the action. Indirect costs are those which are not directly connected to the action, and they are normally used in a percentage. So in your case, it's 7%. Here you can see the list.
Hi, Licinia. Sorry to interrupt you because here we don't see the slide.
Next slide, please. Yes. I thought you had it and I hadn't seen it yet.
Yeah, but here it was not the case.
Oh, sorry about that. So do you see it now?
Not
Not
yet.
yet.
Not yet.
Okay, so you should see the next slide, which is direct costs. Is it visible now?
No, no. Maybe we stop the presentation and start again, because it seems
Okay.
completely frozen.
Is there anything I can do, or is this a technical issue?
No, I suppose it's a technical delay.
Or maybe Licinia can take control if you have the presentation open.
I can, but how can I share it?
No, we see
Yes,
it now.
it's there.
Okay.
Done.
Okay. Great. Thank you. Okay, so like I was saying, direct costs are those that are directly connected to the action. They're necessary for its implementation. And these are the types of direct costs that you have. Indirect costs are covered in your case by the 7% flat rate. And these are usual costs that you are calculating a percentage of, or that are costs that are using as general for your organization, not specifically for the action. So if you look here, these are the 4 types of direct costs: personnel costs, subcontracting costs, purchase costs, which we have already seen. These are the costs where you need to keep in mind the 15% threshold in relation to the personnel costs. And then lastly, other cost categories. So we will be concentrating our presentation on the personnel costs because it's here that we see most of the errors, but we will also be looking into subcontracting, purchase costs, particularly equipment, other goods, works and services, depreciation, for example, and other cost categories, financial support to third parties and land purchase. Next slide, please. Brilliant. Okay, so like I said, this will be a big chunk of this presentation, personal costs. I will be going slowly on this, and like I said, we will be giving you further guidance available on our website. So I really ask for your full attention. So here we are looking into the A1 category. This is the most common category. This is so personnel which is working for your organization under an employment contract or equivalent, an appointment act if you are a civil servant, and so for public bodies. Please note that this is not staff which is provided by a temporary agency. Okay, this is subcontracting or C3, purchase of costs. Okay, and a particular note on supplementary payments. These are available if it's your usual remuneration practice. It's paid in a consistent manner and for the same kind of work and expertise. The criteria used to calculate the supplementary payments is objective and generally applied to the beneficiary, and regardless of the the source of funding used. This is very important as well. And here we indicate the standard case 1A, which is the most common in EU funding. And it's when the employee whose remuneration is fixed, and this is regardless of their involvement in different specific projects. Next slide, please. So here we go into what is normally included in these costs in this category and what is not. Well, there's no surprise to see on the left side a fixed salary, of course. The fixed complements, family allowance, contribution to medical insurance schemes. Then you have variable components, but following your usual practices, social security contributions, taxes, end of contract indemnities. And here, please then report only the pro rata. So it's eligible, but for that particular reporting period, and any other as long as it's beneficiary's usual practices required by national law, etc. What does it not include? Any remuneration which is not an actual cost for you, the beneficiary. Payments of dividends to employees, any variable components which are based on commercial targets or fundraising targets, any arbitrary bonuses, and bonuses that depend on budget availability on the specific project. So here you have an idea what you can include and what you cannot include. Next slide, please. Do you see it already?
Yes, Licinia.
Okay. Here I'm going into another personal cost category, A2, so natural persons and seconded persons. What are natural persons? They're self-employed. They work for the action, for you, the beneficiary, under the conditions which are similar to those an employee, but not under an employment contract. Okay, so in-house consultants, for example. They are not costs of person who employees of a beneficiary, owners of the beneficiary, if this beneficiary is an SME. SME, we will see it another cost category. Then seconded persons, persons who are seconded by a third party against payment. And we have already seen that this is not staff provided by a temporary work agency. Okay, next slide, please. So here the eligibility conditions is that you work under conditions which are similar to those of an employee. What does it mean? It means that, for example, if your employee is allowed to do teleworking 50%, then the seconded person is also allowed to telework 50%. If your employee is not allowed to telework more than 50%, 80%, then the seconded person neither. So this is very important that they have similar conditions. The remuneration is based on working time rather than the delivery of specific outputs or products. The result still belongs to you, the beneficiary, the employer, unless it has been agreed otherwise. The calculation is based on the actual contract or the secondment rate. And of course, the costs cannot significantly differ from the personnel that you have working on similar tasks with a contract. So A2, A3, the salary cannot significantly differ to the A1 employees working on similar tasks. Of course, it's only a remuneration of the person and related eligible taxes, which are eligible. Next slide, please. So I still see a delay, but I'm assuming that it's there. So what is acceptable? It is acceptable if the project leader decides that the tasks and the timing of the work and instructs the person accordingly. The person works physically at the premises following a time schedule similar to those of the employees. So here, works physically or teleworking, the example I've given in the previous slide. What is not acceptable? That the project leader does not instruct the person and has no regular meetings with the person. There's no update on the state of play of the work that has been entrusted to this person. The entity authorizes up to 2 days teleworking for employees, but the same does not apply to the beneficiaries, employees or seconded persons. So there is a difference on the teleworking, on working on the premises conditions. For example, the person works from a country other than the one where the beneficiary is located when all the employees work in the beneficiary's country. This is also not acceptable. Next slide, please. I don't know if it's already visible or
Yes,
not.
Licinia.
Yeah, okay, great. So if you have not seen this image, I really invite you to go into the annotated grant agreement. This is really the striking difference on the calculation of the personal costs between Life 21-27 and Life 14-20. So the calculation has really drastically changed. How do you calculate it? First of all, the thing that you see here on the left, personal costs to be calculated per person and for each reporting period. So this is the first thing that has changed, or we recommend that you change. It is no longer calculated per year, but per reporting period. So normally a very common reporting period is 18 months. So you take the cost for the 18 months, not for the year. So this is already a difference. And this is to avoid incomplete years. And then how is it calculated? You take the equivalents, and we will look into how is this calculated, and you multiply by the daily rate. And this is why the amount that you will then need to declare. Okay, if we look at the first component, daily day equivalents, what is it? How do you calculate it? We have a maximum, 215 days. So you take the annual days in a year, and you take holidays, you take other factors, and we have considered 215 days as the maximum, as a simplification. Okay, you take these maximum and you divide them by 12, by the number of months in a year, by 12, and you multiply by the number of months within your reporting period. Let's take 18 months. The next thing you need to multiply is the working time factor. So 1 for full time, 0.5 for example, 50%. And you will get your day equivalents. The next thing you need to calculate is the daily rate. You start by calculating what are my actual personal costs for this employee, for this person, and for this reporting period. You add up all the salaries, you add up any other costs that you might have had, and you take a pro rata if necessary, for this reporting period. And then you divide by the maximum declarable day equivalents and you get your daily rate. You multiply the two, and this is the amount that you will be declaring for this person for this reporting period. So I will be giving you some examples. Next slide, please. So I will take it that you see the next slide already. So here we have a reporting period of 18 months. Okay. And we have 2 persons. So I've made it this very, very simple so that we take it easy to start with. You have person A who is working 50% part-time during the 18 months. If you have a person working with 2 different working time factors, it's also possible. And we will see in the table that this is foreseen and you can calculate easily as well. And we have calculated for this employee, for this person, we have a total cost of 45,000. Okay, so this is case A. For the person B, the person is working full time and we made it easier, 12 months, with a cost of 40,000. So the first thing we need to calculate is the maximum declarable day equivalents. On the case of A, it's 18 months part-time. So you start always 215 divided by 12 and then multiplied by the number of months for this reporting period, 18, and 0.5 because this person is working part-time, the 50%. You get 161 point something, and here you need to round up to either 0.5 or 0.0. You need to round it up. So this is the first equation, your first result for your equation. In the case 2, we have 12 months working full-time. So you start the same way, 215 divided by 12. And in this case, you don't multiply by 18, you multiply by 12 because this person, even though the reporting period is 18 months, this person has only worked 12 months. So you put 12 months multiplied by 1, you get the maximum that this person can declare is 215 day equivalents. Next step is to calculate your daily rate. You take your total costs, which we have said it would be 45,000, and you divide by the equivalents, which is in this case 161.5. And this is your daily rate. So forget about hourly rate. This is daily rate. You can consider the daily a day to be composed of 8 hours, but please pay attention to the type of contract that you have. It might be less, so you need to adapt that if you want to convert it in that way. In the second case, then we take the total cost, which we had set to be 40,000, and we divide by the day equivalents, which is 215, and this is your daily rate, 186.05. So in the next slide, we have indicated a print screen from our calculation table, which we really recommend you to use. It's not compulsory, but we have heard from those that have used it that it's really useful. So we recommend you to use it. And like I said, we have expanded it to include also to not only the A1 employees, but also A2, A3, A4, A5, which we will be looking into a minute. So if you take here, this looks a little bit complicated, but actually it's quite simple. So the parts in blue are the parts that you will need to fill in. So you see here right in the middle, actual personal costs. And you have for the first row the person A. So we had said it was 45,000. So you place here 45,000. Then you go to the left. You see here the number of months. It's 18 months. The time factor, we had said that the person is working half time, so 0.5. And automatically, you see here on the far left that the table will indicate to you the same amount that we have calculated, 161.5 as the maximum declarable days. And then on the right, you see the daily rate has been calculated. Now, if this person has indeed worked all these days, then you indicate this here on the last column to the right, 161.5, and you see that the personal cost for the reporting period is here 45,000. In case this person has actually worked less, you need to see your time registration, and you indicate here 50-day equivalents. Well, the personal cost for the reporting period will then multiply this 50 by the daily rate. So it really takes into consideration all possibilities. For the person B, we had said that the actual personal costs were 40,000. So you indicate here in the middle 40,000. This is in the blue bold. You indicate then on the left the number of months, 12 months. This person is working full time, so you indicate 1, and then you see that it will indicate to you 215, and also the daily rate 186.05. And again, if this person has worked the 250 days indeed, you will indicate this, and here the table will indicate then the amount that you can declare for your reporting period. In the middle here in green, you will see that we have created in the table, we have inserted in the table, this is an addition to the table that was that is in our website available, is the possibility of working a second and even a third working time factor for the same employee. So for example, if the person A works 10 months as full-time, but then decides to go half-time, then you can put here 10 months on the first row, on the first column, sorry, with 1, and then the rest of the months in the second, in this column here where it says with second working time factor, and then the other working time factor, sorry, of 0.5, and the table will calculate then the daily rate and the amount that you need to be indicating. So we really hope that this table will be will make it easier for you to calculate these personal costs. We will be making it available soon on our website, and like I said, we will be thinking of giving you some additional guidance as well on this. So next slide, please. So here we are looking into how we calculate A2 and A3 type of staff. Okay, I will give you this example here, and then you can, when the table is available, you can try it out as well. It's slightly different than the A1 employees because of the type of contract that you might have. And if you look at the annotated grant agreement, it gives you these 3 possibilities. So if the hourly rate is indicated in the contract, normally it's multiplied by 8, but please check. If there's a fixed amount of number of days in the contract, then please take that into consideration to calculate the daily rate, the fixed amount divided by the number of days. If the contract states a fixed amount for the work, but that does not specifically indicate the number of days, then please check how many days this person has really worked. Here we give an example, a 6 months contract, 60 days equivalents worked according to the time records, and the monthly pay foreseen is 3,000. So how do you calculate? You take the personal costs for the action, which will be 60. So this person has worked 60 days multiplied by the daily rate. And how do you calculate the daily rate? you take the annual personal cost. So in this case, this person has worked 6 months, so 6 multiplied by 3, and then the usual calculation, 215 divided by 12 multiplied by 6 months. And this is then the calculation. You will get 18,000 divided by 100.7, 0.5, sorry, so always rounded to 0.5 or 0.0, and you get your daily rate. So what can you declare for this person? 60 days multiplied by the daily rate. So you can declare 10,046 euros and 40 cents. I hope this is clear. Next slide, please. So here we are moving into another cost category, A4. Okay, these are SME owners or natural persons not receiving a salary. So who are these persons? So these are persons who are directly owners or co-owners, and the percentage of ownership is not important or relevant. The beneficiary, yeah, so you are an SME, sorry, excuse me, and the person is not an employee of the beneficiary. So, and you're not receiving a salary. Beneficiaries who are not natural persons, so sign the grant agreement on his or her own behalf, so not on behalf of another legal person. What is it not? So SME owners who receive a salary. So if you are an SME owner but you receive a salary, then you need to declare your costs on the A1 category, unless you can show that the salary corresponds exclusively to the management of the SME, and it's therefore not linked to this particular action. We've already seen some of these cases. Next slide, please. So here we are looking into eligibility and how you can calculate this. You need to fulfill, of course, all the eligibility conditions that we will be looking at later. So SME owner, a natural person who works on the action but does not receive a salary. So how is this calculated? This is a unit cost. And of course, like we just said before, you need to keep track on how many unit costs you can declare. For further guidance on this, please check Annex 2A. And this is how it is calculated. This is a fixed amount, 5,080 divided by 18 days. This is the rate, and then you need to multiply it by a correction coefficient, which is country specific to where the SME is located. I have taken here an Austrian SME owner not receiving a salary and that has worked 6 days in this reporting period. You take 6 days and multiply it by this unit cost multiplied by the coefficient for Austria, which is in this case 106.3, and you get 1,800 euros. So again, this type of calculation will be included in our personal costs table, which will be soon available to you. Next slide, please. So here you have the volunteers. This is the last personal cost category that we will be looking into. So these are volunteers. Who are volunteers? They are persons who work freely for you on a non-compulsory basis. And as they are volunteers, they are not paid. So there is actually no bank transfer from you to them. They are not paid. They are included in the action so that you get a little bit more EU funding for these costs, but they are not paid. This is important. Which are the eligibility conditions? You can declare maximum 50% of the total project costs and contributions intimated in your proposal. So this has already been verified. Per action, the maximum EU contribution cannot be higher than the total eligible costs without volunteers. Okay, so this, I suggest that you create a little formula in an Excel table so that you check, but again, this has been checked for your grant agreement. What is important for you to keep in mind is that at reporting, you may not exceed the amount of volunteers for each beneficiary, which has already been set out in your budget in Annex 2 of your grant agreement. Next slide, please. So this is the last slide on personal costs. We will be looking into how to calculate volunteer costs. Like SME unit costs, they are described in Annex 2A, and there's an amount per unit. It's a daily rate, which depends on each country. And then you need to multiply it by the day equivalents worked for the action. So here I have taken a volunteer working half-time for 3 months in Belgium. The daily rate is 131 for Belgium. So day equivalents is the same way of calculating, always starting by 215 divided by 12, multiplied by 3 months, multiplied by 0.5 working half time, and this is the amount you get. So you multiply 26.87 by the daily rate for Belgium, and this is the amount that you can declare. Again, the notice on the hour, which I have already explained before. So this was the last slide on the personal costs. I hope it has been clear, but if not, please put some questions in the slide. Next slide, please. Okay, we move to another cost category, subcontracting. Okay, there's also some confusion sometimes between subcontracting and contracts and purchases. Okay, so we have here tried to divide it and to give you some guidance and some examples. General tip we give is, if you are not sure if it's subcontracting or purchase, put it in subcontracting. Okay, of course, subcontracting is eligible if you comply with your usual practices of subcontracting and public procurement, if you are a contracting authority. It concerns the implementation of action tasks, so that you foresee you don't have this expertise and you need to hire somebody external to do this task for you. So it's a task that you are outsourcing. For the coordinators, the coordination, the management of the action cannot be subcontracting. In contrast, purchase of costs concerns travels, equipment, goods, work, services that are necessary for the beneficiaries to implement the work, but they are not action tasks. You are not delegating something in its totality to be done by somebody else, your subcontractor. And here we give some examples of subcontracting, so restoring activities, monitoring fire indications, species, etc. So really technical things. And examples of purchases, your audit, if necessary, translations of documents, publication brochures, legal services, organizations of rooms, caterings for a meeting. However, for example, if you are delegating or subcontracting a whole organization on an event from start to finish, then this wouldn't be a person, this would be a subcontracting. So yeah, it is sometimes difficult, but if you have doubts, put it in subcontracting. Or contact your PAFO for further guidance. Next slide, please. So we move here into another cost category, purchase of costs. I will not go into travel and subsistence. This is, you need to follow your own accounting practices. I will go directly into equipment. And here in equipment, you have basically two options. One, where only the depreciation of the costs is foreseen. This is mostly for SET, PrEP, TA, so technical assistance PPs. And the other option is you have the possibility to depreciate, but then you need to list the equipment which is going to be depreciation. And this is in the case of SAPs, SNPs and SNAPs, and the CAPs as well. And you then also, together with this listed equipment depreciation possibility, you have also the full cost, which we will look into in the next slides. So what is the depreciation? It needs to be actually incurred, written off in accordance with international accounting standards and your usual accounting practices. And of course, for the equipment that you are depreciating, only the portion of the costs that corresponds to the rate of the actual use of the action for that reporting period can be declared. This is also a pro rata that you need to do. In terms of costs, of course, costs for renting or leasing are possible if you are not buying an equipment and depreciating, but they cannot exceed the depreciation costs of similar equipment. The financing fees are not eligible, for example. Next slide, please. So here is what you can include. Depreciation cost of equipment, infrastructure, assets for the proportion used in the action. In some cases, in the case of infrastructure, it may also include the costs necessary to ensure that the asset is ready for its intended use. For example, site preparation, delivery and handling, installation, and what it is not. So if in your usual practice is to consider durable equipment costs as indirect costs, then these cannot be declared as direct costs because you already have the 7% flat rate, which is supposed to cover this. Okay, next slide, please. So how is this calculated? Purchase price of the equipment must be allocated on a systematic basis over its full useful time. Depreciation equipment costs must be, of course, lower than the equipment purchase price, only for the periods that you have used. So not before, they cannot be charged, of course. And what I have mentioned already before, the depreciation costs must be calculated for each reporting period. Next slide, please. So this is the other option that I was mentioning. So in the case that you have listed equipment and full cost possibility, these are for the actions indicated here in red. This is with more details in the Annex 5, the so-called durability clause. So in order for it to be eligible, the full cost, you need to have it purchased or developed specifically for the action. You need to commit to use it and maintain it after the end of the action for the activities pursuing the action's objectives, for at least 5 years after the end of the action or until the end of its economic span, so fully depreciated, whichever is earlier. Of course, it needs to be recorded under a fixed asset account of you, the beneficiary. And again, as you heard already before, account according to international accounting standards and your usual accounting practices. Next slide. So here, this is again an indication of what might be goods, works and services. I will not go into it a lot because we have already indicated this in the subcontracting. This is just to give you some other examples of typical ones. Next slide, please. So here we move to the last cost category, and in particular, financial support to third parties. So these normally need to be you have already, if these are eligible according to your call text, and you have indicated some, these need to be there from the outset. So they need to be there from the grant agreement. The conditions need to be described in Annex 1. If not, an amendment is necessary. And what are these? What is this financial support to third parties? It can take two forms, either grants or prices. So in the grants, you will need to set out a maximum amount per third party. This is indicated in your data sheet in your grant agreement. The different types of activity that qualify for this financial support. So you need to enclose a list, the persons or categories of persons that will be supported, how you will be calculating the amount of the financial support. So what criteria will you be using? And of course, the criteria and procedures to allow to provide this financial support. For the prices, you need to decide and describe to us what is the eligibility and award criteria, the amount of the prize, and the payment arrangements, of course. So just a kind reminder that support in kind is not considered a financial support. Next slide, please. This is just an extract from the template where you will be then requested to fill in the information regarding this financial support to third parties, if this is allowed in your call and if this has been foreseen in your grant agreement. Next slide, please. Okay, so now we have left all the cost categories and we are looking into the eligibility conditions. This we have also mentioned in our meeting on the 3rd of October. Basically, they need to be incurred by you or your affiliated entities during the duration of the project, except of course the final reporting. They need to be indicated, foreseen in the grant agreement, connected to the action and necessary for its implementation, identifiable and verifiable. This means they need to be recorded in your accounts to have the supporting documents appropriate to the cost, applicable, compliant with all applicable national laws and taxes, labor, social security, and last but not least, reasonable, justified, and comply with principle of sound financial management. So basically, if they are not justified and we consider them reckless, excessive, not reasonable, we reserve the right to reject the cost. Next slide, please. So we just wanted to give you some more details on what we mean by actually incurred by the beneficiaries and affiliated entities. They need to be real. So it's not an estimation. It's not what was budgeted or planned. It's what was really happened. So generally and definitely borne and paid by the beneficiary or the affiliated entity, and that you have the related supporting documents and that they are in your accounting records and complying with the applicable accounting rules and your own usual practices. Next slide. So there's usual also some confusion or doubts on what do we mean when we say the cost needs to be incurred during the action duration. And of course, there are some exceptions. So what do we mean? So the date that counts is not when the cost was ordered, invoiced, or paid. So for services, what you can take note is that the date to take is when the service was provided. For the works is when the works were carried out. For the deliverables is when the products were delivered. So for example, if you are having your kickoff meeting the second week of the start of your action, but you have bought the tickets already long in advance to profit from a good rate, then these costs, even though you have paid them before the action has started, they are eligible because the meeting takes place during the action duration. Okay, so the costs invoiced or paid after the end of the date are eligible if the debt existed already during the action. So if you have incurred these costs before the end of your action and the cost was known at the moment of the final report. Okay, some exceptions, of course, the certificate or the audit will be done after the final report. If there's some project review, or the costs of the personnel which are necessary to prepare the final report. Please, however, take in note that it's not eligible any activity foreseen in Annex 1, but undertaken after the end of the action. So next slide. This is it then from our side. This is the way that you can keep in touch with us. And the next slide, then I just want to thank you very much for your attention. I hope that things were cleared, and we can now go into the questions with Anne. Thank you.
Good morning to everybody. I know it was a lot, but let's see for the questions what we can do to answer as many that did not come up during the presentation. With regard to the slides and the recording of today, I think that it's the same as for the previous presentations that we did. I thought that you could download them from where you registered, but I will double check it, or maybe Nadia, do you know?
And they will be available on the registration platform as soon as all the welcome meeting will be concluded. So today is the last session.
Okay.
After today, all the material will be uploaded on the registration platform.
Okay, and can we also put them on the website or not? For later, for beneficiaries that could not participate?
All the participants will receive in any case all the presentations and the link for the recording. We will see to put also on the website, yes.
Okay, thank you. Okay, so then first question, while writing the project application, we specified the number of person months per work package and task. Can we deviate from this during the project, or will there be consequences? Well, normally you will always deviate from what was in the proposal, because you will have to declare everything that is actual. So yes, you can deviate, and there is also in the reporting template a section on budget where if there are big differences and so on, you can specify the changes that were done. Can the monthly time registrations be signed electronically? Well, if you use an electronic system, then of course it will be signed electronically. Otherwise, you just need to make sure that you use an electronic signature that is really linked to the person. So it's not a copy paste of an electronic signature that is then just pasted on a financial statement or on a time registration document. So it needs to be secure. So it can only be used by the person itself. So there is then normally also a data stamp and so on inside. So then, of course, it can be done. Previously, financial reporting was on the level of each invoice. The new template is much less detailed, cost summed per cost category, no detailing needed. Well, you have the financial statement that, in fact, per participant will only give the totals per cost category. But in the technical report that you can see, there is a template that you can see from the portal. There you will have the use of resources inside, and you can see from there what is the details that are needed and that you need to put inside, because there is also a column where you need to specify more what the cost is about. So you should not download this and fill this document there. It will normally, when the reporting is opened, you will get access to this and you will then use the document that is made available to you. What do you mean by personal assigned to the action? Is specific assignment document required? Well, normally, you can also have written instructions in your organization that assign persons to specific projects. It can maybe sometimes be based on an organizational chart or a documented management decision. But if you have reliable time records, which you should have in order to have an eligible cost, this can also demonstrate that the person is working on the project. A person who is intermittently working in the project is not under a staff contract. He or she can also participate in other activities as volunteer and report cost. Well, you will need some type of contract for the person to declare the cost, because we need to know what type under which type of category they fall. If the person has no contract or employment contract, but they want to work as a volunteer, then of course they can do, but then they are not paid for their hours. You can declare, of course, the unit cost for the hours and the days that they have worked. But then you would still need to have some type of contract, volunteer contract, and they should also specify or follow the rules on volunteering within the country. Then how does the personal cost need to correspond in the bookkeeping versus project reporting? The calculation method does not correspond to actual work days. Well, in any case, you will need to take the total salary cost or the cost that was incurred for this person from the bookkeeping system. It will often be the total cost during a certain period. So you will need to deduct the ineligible parts. For example, sometimes bonuses are not all eligible. Some might, some others might not. There might also be costs that are only partially applicable for the project, like end of contract indemnities and so on. So then you will need to do the pro rata and only keep those parts inside that are, of course, eligible under the grant agreement. So you will have the maximum of the 215 days to calculate the daily rate, as was already mentioned in the presentation of Licinia, 215 days per year. It can be pro rata more if you have a longer reporting period. It cannot be more than the 215 days. I saw further questions on that as well. So even if you have registered more in your system, it is maximum 215 days for a full-time person working during 1 year. Otherwise, it is pro rata. Can we use a stamp as the last resource in case any invoice does not include a reference or acronym of the project? Of course, you could do this, but you should also make sure that the invoice lists the things that were purchased in a clear way, so that at least there is a link to the project. Because if there is only amount and just like a subject like services, this will not be sufficient. So then you might also need to have your order and so on. So even if you put in a stamp, it might not be recognized. So of course a stamp can help, but it is what is contained in the invoice and the link with the project. This can also be done based on what you have ordered, that it is clear that there is a link with the project. And then also the order that you placed with the supplier might be useful. Then I also see the question, is it possible to transfer budget from one cost category, for instance, travel, to another, and how much? There is no limitation. But of course, budget transfers, they cannot call into question the attribution of the grant in case you do big changes to your grant agreement. So the description of the action should not change. So everything that is fitting still with what you were supposed to do. In case you don't have changes, you can just list them in the section of your reporting that is concerning the budget. So you can explain if there are major changes. If you are not sure, then you will need to seek further advice from the agency or from the monitors. We will explain this later. Then presentations from October 4th and today. So I think we already mentioned this. They will be made available. When you mention the 15% threshold for the reporting of costs, you refer to consolidated data for all the project and not for individual partners. No, this is per partner. So the partner will need to check the staff cost. So it is based on the staff cost of that partner. And then depending on the limits that you will find, then the declaration of cost should be done, starting from the highest costs downwards. Calculation sheet, employee costs, are we expected to submit it with the financial report? No. We will ask you to provide supporting documents and information when we need it. So it should not be automatically provided. When we ask you to provide us information at the time of the additional pre-financing, we will also limit this because we cannot check everything. But if you would like to send the calculation sheet of the personal costs, you can do it. So we can have a look and give you some feedback. Is there a frequently asked question document available? Note that the frequently asked question tool on the portal is quite user unfriendly. If we have questions, where can we go? I would give the floor to Nadia. She can explain you a bit better.
Yeah. So thanks a lot for that. Yeah, indeed. Bon, it's true that the FAQ tool in the portal might have some limitation. And we do not have for the moment any FAQ document available specifically for life. So what we will do, we will work on our live website, web page. We have web pages on reporting and contractual and financial aspect that we will indeed enhance a bit with some document and some tools that we have started already to help you to understand the things, and also some frequently asked questions or some what we can see as common and recurrent issues that we see when we assess the financial aspect. So that will come in the future. For now, what you do is if you have a technical monitor, an external monitor assigned to your project, so that's all project except the project from clean energy transition, you have to contact them via the monitoring help desk. So you should have received, all of you from Life 21 or Life 22 already an access to, when I say you, it's the coordinating beneficiary and it's the contact person. So the person who is referred in the Funding International portal as the main contact person who has received an email from the monitoring help desk with a code. So you should have received that, and therefore you have access to the monitoring help desk. For the clean energy transition project, you have to contact your project advisor with your question if you have any doubt. I hope I have answered to the question.
Thank you, Nadia. And then also we have the annotated grant agreement, which is replacing the previous Annex 10 under the old LIFE program. There is a lot of information already inside for if you want to go quick and look up things, you can just do Control F and put the term that you would like to look for inside, and then you can see all the information that is there. There will be a new version coming out. We are not yet sure about the date, but it could be by the end of November. So just to mention, so currently there is still a draft that is available. Then how should you include sick and holiday days in the daily equivalence? Is a sick day considered a day equivalent, for example? Well, as mentioned by Licinia, you cannot deduct these days from the 215 days to calculate your daily rate. And as sick and holidays are not working days, you can also not claim them on your project. So in principle, they are not taken into account. What happens if during the project it turns out that part of the budget of a cost category will not be used? Well, it's not a problem. As we said, you have flexibility to shift budget to other categories if you need. However, there is a limitation for certain categories like volunteers and financial support to third parties. You may need to have an amendment before this can be done. So for that, you may need to pay attention. Then Life 21-27 has entirely new approach to time registration. is merged with the old timesheet requirements to be expected. Simplification is much welcome. Well, if you have also projects under the old life, you can still use the time registration from then, because there you need to have the consolidated view of the working time of a person, while under the new program, this is no longer the case. You can just have time registration for your project. Of course, you need to make sure that the time registration that you keep, it's still in line with what is in the time recording in the annotated grant agreement. So always have a little look there first. Otherwise, I would just, for those that are not sure, just use the template that is available in the portal, as it only requires the days registered for your project, and it's easiest way not to do mistakes, but have a look at the annotated grant agreement. Can the working factor be 0.75? Yes, of course. If a staff member is hired on a contract that is only asking them to work part-time for 75%, this is then correct. So it is not 75% of the time that the person works on the live project. It is the working time in the contract that the person has with your organization. What if the employee contract foresees 213 days of work? Shall I still take 215 days in my calculation? Yes, you always have to use 215 days for a year, or the pro rata if your reporting period is longer or shorter. What do you recommend to do regarding personal costs in cases where the national legislation stipulates that the FTE is 230? It's always 215 days, because if you use 215 days to calculate your salary cost, if you seen for 1 year, then the total salary cost is divided by 215. So if you would charge 230 days at the rate that is calculated based on 215 days, you would then have 15 days extra reimbursed. So you would ask more money than what you actually spent. So it is always 215 days maximum. Even equipment is fully depreciated in 5 years according with national law, and our project will last for 3 years. Can we report the full cost? Well, it depends what you have in your grant agreement. I know for SET that they always have to depreciate. For other calls, you may need to see, but the most frequently are that you have the possibility to have the full cost declared, but it depends if the durability clause is eligible for you. So you can see this from your grant agreement. Is travel cost for external participants, not staff allocated to the action, eligible if we have budgeted for this in the travel or event budget? It is to be put under the travel cost category. Of course, external participants, as long as they are not subcontractors, because then it should normally be included in the subcontracting cost. Hello, what's the level of detail foreseen for expenditure tracking by project, by work package, by task? Well, you will be requested to report on, especially for the staff costs, by work package. As already mentioned also during previous presentations, there is not a need that you have this necessarily in your timesheet. It might help, but it is not obligatory. There can also be other ways to track it depending on the person's, if you know it's only working on one work package, for example, then it is easy. All his time or her time will then be allocated to that work package. So you can also have alternative ways to track it, but normally we have it per work package. If the salary changes during the period, is the reported cost to be calculated separately for the period prior and after the increase? Well, you will need to take from your accounting system the total salary cost for that periodic report. So you take it from there for the period that the person has been working on the project, of course. So then you just add up everything, and then the daily rate is calculated using the total salary cost. CFS threshold, the 500K threshold is before or after the overheads. It is for the EU contribution that you request. So it is for cost. There is no difference between direct or indirect cost. So it is the total. So you need to see the EU contribution versus the cost. Calculation sheet employee cost. Do similar tools exist for other cost categories? No, we don't have this. As mentioned also by Lesinia, the calculation sheet for personal costs, we have extended it now also to the other cost categories like natural persons, volunteers, SME owners, and so on. And it will be available, hopefully, we will put it also in the, together with the documents that can be downloaded by you, but we will also put it on the website. We will try to have it there end of this week, beginning of next week. If full-time by contract is different from 8 hours, how are they equivalents calculated? Well, have a look at the annotated grant agreement, because there in the record keeping section, it's very well specified, and there are different methods. So it is best that you have a look there. Belgium technically has 13.9 months in salary. When calculating personal cost, do we need to divide to 15 by no, you don't divide the 215. You take the total salary cost during which the person was working on the project, and you divide that by 215 or the pro rata, depending on the number of months that the person was in the project. Does CINEA offer some training on life financial management? If this exists elsewhere, please let us know. No, we do the presentations like they are now. We might still add some extra guidance or maybe some videos later on. But for the moment, we have not foreseen to have something outside what we are doing now. One of our beneficiaries expects to check their financial documentation, including salary calculations. Is this the responsibility of coordinator? No. No, the coordinator should just make sure that everyone in the consortium is aware how they need to report and how they need to calculate things. If there are questions or if it's not clear, then we are there to help you. As Nadia said, you can either contact the help desk of the monitors or your project advisor or the financial officer of your project. Would beneficiaries in non-European countries need to comply with European public procurement rules? Well, they need to comply with the national law on procurement. Can costs for volunteers be reported even if they were not foreseen in the project proposal? Well, you can report them, but they will not be paid, because volunteer cost is something that is subject to amendment. So you will have first to do the amendment. And the grant agreement data sheet lists terms without specifying, explaining what this encompasses. Where can we find more information? So as I already mentioned, if you want to look in the grant agreement or in the annotated grant agreement, and you want to look up specific terms, you can do this by just putting Control F and then typing the term, because normally then you can see and you can find information on that specific term. If you cannot find it, then you can just ask through the help desk, or you can ask through the project advisor. Is there a template for the use of resources? There is, as I said, it is part of the technical report. You can check it out. There is a version that is posted in the portal, but don't use that to fill, because you will be able to download it when the reporting is opened for you, and you should download it from there. I hope this is correct, Nadia.
Yeah, it's correct. Actually, what you have under the portal, under what we call the reference document, it's only the template. But of course, when it's time for you to report, you will report them, I think, directly online, actually, work package by work package. So, but the template can help you already to see what you will have to report. But obviously you don't report via the template. By the way, it's a PDF.
Okay, so then is VAT eligible? In case, how to deal with VAT on in-house consultant invoices? Well, VAT is eligible if you cannot recover it. So only that part. And for in-house consultant invoices, I'm not entirely sure what it is, what it means. But of course, if the VAT is on the invoice, you can recover it. If you cannot recover it through your national tax authorities. We have a time recording system, but it is filled in hours. It is possible to use it for Live 22. Yes, of course, if the time recording system complies, of course, if it is a reliable system, secure system. So if you have it electronically, you need to make sure that there is a password, username of the persons that list the amount of hours and those that validate. And the electronic validation should also then be done in the system, and there should be an auditable log. So it is important that other persons and the staff member cannot change the time. If you have the time recording system on paper, then also have a quick look at the annotated grant agreement record keeping part to see what should be there. What happens? There are 2 EU projects, H2020, a live program. H2020, we declare personal cost based on real hours per year, and here not. Should we unify this? Well, H2020, it's like the old live program, more or less. So you need to see how many hours or days that you have declared under these programs, under the previous ones, because for the new program, also for Horizon, the maximum number of days per year that can be declared is 215. So if you already have a number of days declared under the other projects that are from the previous programs, you need to make sure that you don't declare more than the 215 days, because this is for all the EU projects together. State employees can work with projects up till 20 working hours per week. Normal working week is 40 hours. How to calculate staff costs? Well, in any case, if I understand that there could maybe be more than one contract, then 20 hours for the normal work, maybe 20 hours for additional activities, you will need to calculate the daily rate using the total of both contracts. So the total salary cost related to the 2 contracts. Also have a look on supplementary payments in the annotated grant agreement, because it might also fall under that. But normally, if you have more than one contract ongoing at the same time, you need to take the total salary cost of the person. If a person works during the first 12 months of an 18-month reporting period, the person is still an employee but stops participating from month 13. For the maximum days, you take 12 or 18, 12. So you only take the period that the person was working on the project. Does the case of an assistant professor working for a Chinese university that is not a consortium member fall into the cost for natural persons? Well, it all depends what type of contract that the person has with the beneficiary. So if the person is paid by your organization and he has a contract with your organization, then of course costs can be declared. If the person is seconded from a Chinese university, I'm not entirely sure if this is what you meant, and you have a secondment agreement, and that is also possible. So, but there should be a contractual link with the beneficiary. And then depending on the type of contract, it can be declared a cost. If a person, oops, the question is gone. Okay, I think the first question there on the complex life financial guidelines, Nadia already answered. I would say that there will probably be coming something on frequently asked questions, but we don't want to repeat things that can be found in annotated grant agreements. So we are currently seeing how this is the best way to do. So there might be something, but always refer to annotated grant agreement first. And if you don't know the answer, you can use the help desk or you can contact your project advisor. Does the cost of VAT registered individual taking part in the project by performing tasks of various kind fall into the SME natural person? No. The SME owner, this is when it is a participant in the project, so it is a beneficiary. If you hire somebody from an individual that is working for the beneficiary and comes from an SME, or you have a natural person contract with it, then of course you can declare the cost in that SME natural person category, depending on what is the case, but it depends on the contract that you have with this person. If a person works for 2 life projects, each 50%, are 2 15 days applicable to each project? Well, then you will have to decide if the person works more than 215 days on the 2 life projects together, then you will need to decide under which the costs will be declared, because you can maximum declare 215 for both projects. I mean, for all EU projects during the same year. So this is then up to you to decide. Where can we find the template of method A recording of staff costs? Cannot find it in the portal. I'm not entirely sure. Licinia, do you know what this means? Is it for the calculation sheet? Because this one you can download later on with the rest of the slides, and we will put it on the website.
So this template you can find in reference documents. So it would be the first link that we indicate. Then you need to select live, and then you need to select all the way down until you find reporting, and it's under the reporting section. So I can put maybe the link in Slido again.
Okay. For seconded persons.
And we are at 11:31, so another maybe 5 minutes, because we also started late. If nobody minds that we have another 5 minutes of questions.
Okay, so then maybe we are now at 32. So for seconded persons, the rate must be similar. What percentage of difference is acceptable? Well, we say similar. Of course, when there are changes in rates because of the countries, if the person works in a country where the cost is much more expensive than the country of the beneficiary, then that in itself it's not a problem. There is not really percentage that we can mention, but if, for example, you would claim double of what a normal employee with the same background, role, tasks, and so would do, then of course this is not acceptable, and then we will rather see this as subcontracting or as purchase costs. But that we cannot really put a percentage on it. If you have doubts, I would say you can also check this maybe already at the interim stage if you report. Can seconded persons work at home, or are they obliged to work in an office? Well, seconded persons as well as natural persons, they need to follow the same rules as the employees of the organizations they work for. If the rules are clear and everybody needs to come 2 days to the office at least every week, then this also is the same for the seconded person or for the natural person. So, and then it is the office of the beneficiary. It's not the office of where the person normally works. For staff cost calculation, how to deal with a working day of 7.2 hours instead of 8? Well, there I would just tell you that it is good to check the annotated grant agreement record keeping section, because there you will find also some examples on how to convert your cost. But of course, you can use then 7.2 instead of 8. Is salary for overtime eligible cost? Well, it all depends if it's paid. So if you just declare all the days that you work based on conversion of hours into days, and you don't get more salary cost than what is usual to your contract, then the total salary cost, then the number of days that you actually worked, if there is also overtime included, then you will be able to charge it in the time that you spent on the project. But the calculation, of course, will remain the same. It's always the 215 days that is used. Can seconded person work in smart working? Well, I think I already answered. The rules should be the same for seconded persons, natural persons. It's similar to what employees can do. If they can do it, then seconded persons and natural persons can do the same. Well, persons working less than 8 hours a day, if this is, you need to convert the time to a working day. So for some persons, a working day will be 8 hours. For others, it will be 7.2, 7.6. It depends a little bit what your situation is, but have a look at the record keeping section in the annotated grant agreement. If the underspent of below 70% is deducted from the next pre-financing payment, can this deducted amount be added again later on? Well, you will have to wait until your final payment. So if you know that you will underconsume a lot and you will not reach the 70%, then it might be better that you change reporting period. But before you have to do the reporting. So if you keep track of your cost, you will see this and then you can ask for an amendment to your reporting period. Otherwise, you will just get the rest paid with the final payment.
And it's 11:30. Yeah, we should stop. Yeah.
Yes, we will stop. So, but I think that we already answered a lot of questions. So.
Yeah, so we will be back at 11:45 with Nadia's presentation on amendments, suspensions, and terminations. So see you in a minute. Enjoy your coffee.
Good morning to everybody. So now it's 11:47. So we had a shorter break, and sorry for that. So now we will continue with the second session. Obviously, everything is linked, but this one will be more focused on amendment, suspension and termination. So I am Nadia Lamandaz. I'm working in CINEA, in the unit in charge of environment and nature on the LIFE program. Next slide, please. So this session is actually called amendment, this first session, but should be best name as how to deal with deviation. You heard our colleagues from the finance talking a lot about deviation. And so what happened if we deviate from that? What happened if we deviate from that? So obviously deviation are very common. And we know that there are a lot of deviations, and some deviation may lead to amendment, other would not lead to amendment, will lead only to information to CINEA and reporting. So that's really important to know, is that not all deviation, and actually a limited number of them, lead to amendment. So in the grant agreement that you have signed, there are some specific articles which refer to amendment. For example, the Article 39, which is called amendment, and it's really state the conditions and the procedure for the amendment. So this article is important, and you can have a look to that more in detail to get exactly the conditions and the procedures. The article 5.5 is also an important article because it's related to what we call the budget flexibility. We heard a lot Licinia explaining and also Anne explaining, for example, that budget shift between beneficiary, between cost category, all that is perfectly allowed without amendment. Obviously, there is always the little caveat if it does not imply significant changes in the description of the action in Annex 1. Actually, what do we mean here is that, as Anne mentioned in one of the reply, actually you have to look to, is this deviation is significant in terms of the project implementation, its objective, its main outcome, what do you plan to do, the ambition also of the project, all that are for us some significant changes. Some of those significant changes, by the way, are not even allowed. So they are actually what we call questioning the award of the action, and this is not allowed even with an amendment. So this is a bit like the red line. So we cannot accept changes that would question the fact that we awarded your project. So this is, but those changes are obviously major changes. So, for example, you do something completely different, or with you reduce a lot the ambition that make your project better than others. So this is a bit the logic. Below that, you can do a lot of deviation, especially if the context imply them or make them necessary. This is also something which is important when you implement your project, and we will come to that later. On the budget flexibility, although you have a lot of flexibility, there are some issues that you cannot change without an amendment. And here Licinia mentioned it already, the volunteer. So if you don't have volunteer and you want to have volunteer, you have to have an amendment. Category with lump sums as well. And the category with budget ceilings, for example, the financial support to third party. Just remember that in some call, those categories are not allowed. In some they are, in some they are not. So the amendment is not always possible either if they were not allowed in the call. Okay. There is a specific element that I will explain better later. It's the addition of amount for subcontract. As you know, this was reminded, subcontract is a bit of a special category where you actually subcontract part of the action to an external entity. Okay, and there again, it's possible to have additional amount subcontracted, and some of that might require an amendment, other might not, and we will have a different type of approval procedure, which is called simplified approval procedure, and I will explain that later. Next slide. So some principles which are important. So we know that, of course, your timing and our timing might be a bit different. So, and sometimes you have to take action quite quickly and you have to implement your project and to adjust your implementation. However, be careful because the retroactivity is not accepted automatically. So for example, if you start doing the changes and those changes might require an amendment and you haven't asked it and we are not aware before, therefore, we might either refuse completely the amendment or accept the amendment, but only from the time where we know about the changes. So why we say that? It's really important that you communicate as soon as you know that a deviation might require an amendment. So basically you inform us, and that's the date where we know about it, okay? One important other thing is the deadline to submit an amendment. So there is nothing in the grant agreement telling that you can't submit an amendment until the end of your project. However, please note that some of the amendment cannot be implemented after the end date of the project. So bluntly, the system will not allow it. Please note as well is that there is a timing for us to instruct the amendment, for you to submit and for us to instruct it. So the general good practice is that you submit the amendment at least 3 months before the end date. Okay, so like this, there is no issues, and we are not blocked by the system. So of course, if you don't know, that's a main principle, and it was already mentioned several times. Ask either your monitor via the monitoring help desk or your project advisor if you don't have a monitor assigned to you, like for the clean energy transition project. Next slide. So there is a little delay. I don't see the slide. Voilà. So there are some deviation, as I was mentioning, that we don't even need, they don't need approval. So all those, I mean, they are really minor deviation. So for example, you have to change something in the budget, a small amount, okay? Some activity that was not foreseen, but you know they are important considering the little change in the context that you had. Or because when you start your implementation, you realize that you have to do something, for example, something before another things. So basically your timeline is different. So all that does not require, and of course, if they don't imply substantive changes, as I said, and that's always something that you have to keep in mind when you analyze your system, your change. I mean, this does not require any prior approval. You just go ahead, you implement your project, because at the end, you know that you will have the same expected result and the same objective and the same ambition. The same with the deliverable. We know that deliverable, you can have some adjustment. For example, the title of the deliverable is not exactly that title, it could be a different one. All these, if you don't change the objective of the work package to which the deliverable is linked to, doesn't require any prior approval. You just go ahead and you implement, and you will just put a little message in when you submit your deliverable or when you report under the specific work package. As I said, some delays in the work, in the deliverable, doesn't require an amendment. Just remember, and we mentioned that already in the other session, that, for example, if you need to change a deliverable delivery due date, you can ask the project advisor to do it. It does not require an amendment. If it's important for you because, for example, a deliverable was foreseen in the first period of your project and it's actually foreseen now in the second, you can ask the project advisor. Alors, again, the change in the context that can have some impact on the milestone or the deliverable. As I said, all this does not require, first, doesn't require an amendment and does not even require systematic approval. I mean, prior approval of SINEA. Of course, what you do, you report on them, for example, in the work package, and that's it. Of course, if you're not sure, please ask either your monitor via the monitoring help desk or your project advisor. Next slide. So there are some changes that require what we call simplified approval. And I will explain, I will have a slide on simplified approval procedures, so a bit later. So, for example, when you have a new subcontract, so you foresee to have a task done by the consortium staff, okay? Personnel, whatever category of personnel of staff, okay? And actually you realize that that will not work and you need to subcontract that part of the action, okay? This, you have to see if the budget is either relatively 10% more or in absolute term 50,000 euro. Therefore, you have to pre-inform us. So basically, you send either via the monitoring help desk or directly to your project advisor. If you are a CET project, you inform us. Okay, so basically what you do, you inform about this change. Okay, and what you will do, you will report on that deviation later on. So here what is important is that there is a prior information that is requested, and that is better to have, and I will explain why. Okay, alors there is a little caveat here, is that but I will maybe explain what I mean as long as the total of the subcontracting stays below the 30%, because I will explain that in a subsequent slide. Next slide. So here it is, the famous simplified approval procedures. What is this? This is when you have a deviation, that, as I was mentioning, the one on actually you decided to subcontract part of the action that was initially not subcontracted. This is require a simplified approval procedure. It means that the next periodic report under the section 4.3 budget, you will explain and you will notify us what you have done. So if you did not notify us before, we did not have this prior information, we will discover during the periodic report, we will discover the change, and therefore we will assess it, and we may disagree with it. Okay. And so this is why the prior information is important. Like this, there is no risk that we reject the cost because at the report, or at least we question the cost at the report, and therefore you have an issue with the eligibility of that specific cost. So this is why it's important to have a prior information. However, the prior information does not remove the necessity for you to signal the cost and this deviation in the section 4.3 of the budget as a deviation, because the specific deviation is required to have a simplified approval procedure at least. Okay. Next slide. So the cases where we require an amendment. So that's some, of course, this is not the full list, it's only examples, but actually all the change of partnership, for example, of course, only beneficiary or affiliated entity can claim cost. So if you have an entity, I mean, staff, for example, of an affiliated that was not foreseen in your grant agreement initially, but you have to do an amendment, because we have to have this affiliated entity recognized as an affiliated an entity that can claim cost. Okay, so that's really important that any change in the partnership composition requires an amendment. There is also as a core of your grant agreement, the section called data sheet. Here we have a lot of different elements, like the periodic report, the duration, the EU contribution. All those elements are fixed in the grant agreement in this data sheet section. Any change to those would require an amendment. So this is really important. And if you haven't, I suppose you already have read the grant agreement, but if you go there and you see all the elements that you have in this section, if you touch that element, it requires an amendment. For example, the reporting period that Anne mentioned and Lichinia. So for example, if you know that you won't be able to spend the 70% by the time of the first reporting period, and you don't want to request less of the second pre-financing, you will have to ask for launch an amendment to have a reporting period which will be a bit delayed. Okay. Duration of the project as well. This is clear. Any cost, any activity outside the duration of the project is not eligible. So all this makes sense. It's very common sense. Other things which we touch upon a bit before is essential aspect of the project. It can be that you do not question the call of the action, or you do not question, for example, the ambition, but still you need to change an important aspect of your project. For example, the technology, or if you have some habitat species targeted and actually you want to have different targeted habitat and species, you have to ask why. Because it might be that in our assessment, this actually call into question the initial award of the grant. So, and it's better to have an amendment because we mutually agree on a new type, a new action, or a new, for example, way to reach your objective. So this is things that usually would require an amendment because like this, you and us, we have a common agreement of main setting of your project. So for example, also new strand of work that was not foreseen and that becomes necessary, and that might represent a significant part of the project and therefore budget. So here it's also important that an amendment could have a clear and common understanding of what is expected and the budget which goes with these expectations. Okay, so the budget shift between beneficiary and project and budget category is only necessary if indeed it's linked to significant changes in the action, not just because it's better that the partner A is doing the action than the partner B, while it's exactly the same result and exactly the same expectation at the work package, for example. This does not require an amendment. I'm hammering a bit that because it's really important. And the last point is the one that I was mentioning before, is as you, most of you have in their grant agreement, a clause which limit the subcontracting to roughly to 30%. Okay, so this clause is a specific clause for most of your projects. So if you know that you will, if you decide, for example, to subcontract more action than what is expected before, and you know that when you do that, you will go above the 30% of the limited subcontracting, this would require an amendment. Obviously, for most of our project, because this limit is relatively high, we never have this risk, but it's really up to you to do this estimation and to know if you are reaching the limit of the 30%, and while you have the clause of the limited subcontracting and tick, and this is the article 6.2 B. So please have a look to the data sheet and try to see if you are in that context before safely implementing only the simplified approval procedure, while in your case, an amendment would be required because you would go above the 30%. If you have a doubt, ask your monitor or your project advisor. So when you have an amendment, there is the amendment procedure to be done. So here I refer to you to the meeting to the presentation that we did on the 4th of October. And obviously on the huge guidance that we have on the portal that explain how to launch a procedure, in which conditions and how. Next slide. So there is an article which is also interesting, is the Article 19. So the Article 19, read it if you haven't done it, is the obligation to inform. So what that means, so basically what we require, what we agreed in this grant agreement is that you have to provide us information when we ask it. So for example, of course, there is the reporting, but there might be also other type of information that we can ask you if we have a doubt, for example, or additional information that we may require to you, and you have to provide them to us because this is how we do our checks, okay? You must also keep us informed if you have any change on your organization step, okay, level. I mean, if, for example, there is your organization change ownership, for example, it can happen, or if you have a change of legal address, all this has to be up to date, and this is via the participant register portal. So the participant register portal must be updated all the time. And the two other points, the beneficiary must inform the granting authority, so SINEA, and the other beneficiary of the consortium, if there are some events or circumstances that makes the implementation of the grant difficult or impossible. Or of course, here it's not all the small issues, but are major issue that will question your ability to implement the grant. Next slide. So that's the point that I was referring about the participant portal. So when you have a change of the legal data, what is required is that you go in the participant register portal, you notify the changes, and the REA Central Validation Service will look at the changes, might request additional documents, supporting document, and will deal with a type of amendment which is named information procedure. So basically, this is not an amendment that you request to SINEA. It's information about changes that are somehow linked to your organization data, and that we take note and we update the participant register portal. Some of those changes might lead to further action and especially further amendment. For example, if you change, if, for example, what we call universal takeover change will imply a change of bank account, that would require an amendment. If not, everything is done in the participant register portal and will appear in the grant management service tool as amended without further process. Okay, next slide. Voila. So here we have finished the suspension. We are finished the amendment, and we will start to talk about termination and suspension. So here again, we have specific article in the grant agreement that I invite you to read carefully. And this presentation now will mostly present those articles and the content of those articles with a bit of explanation and let's say point what you have to be careful on. So just for you to know, both a suspension and a termination can be requested either by the beneficiary or by SINEA. What we mentioned by suspension is when you suspend the implementation of your project. I will come to that later. And a termination is when you either stop the participation of a specific beneficiary or when you stop before the initial end date, the termination, the implementation of a project. Okay. Here, when you have the possibility or you have a doubt about the fact that it might happen, such event might happen, of course, before, please inform your project, your project external monitor via the monitoring help desk or the project advisor. You have to inform us as soon as you have a doubt, and we can also help you to assess the situation and to decide what is the best course of action considering your case. Next slide. Next slide. So the grant agreement suspension requested by the consortium, that's the most common situation. So basically what's happening is that, for example, you have there is something happening, for example, a force majeure, a fire in your company, or some very catastrophic weather conditions in the site where you implement your project. This would make almost impossible to implement your project as foreseen in the continuation. Therefore, you can request to suspend the implementation of your project while you deal with the consequences of that specific situation. Okay. How you do that? The coordinator requests the suspension using an amendment. So basically, you use the amendment. You use the amendment consortium requested by the consortium, and what you do, you suspend the implementation. It's one of the clauses that you will select, and you have to explain why. You explain the date where you will suspend and the date when you think you will be able to resume the activity. Next slide. So just to be clear, when you suspend, you really suspend. There is no possibility to claim any cost during the suspension dates period. So basically, the project is really frozen. And when you know that you can resume the activity, so the conditions are back to normal, what you do, you have to launch a new amendment. Okay, so obviously the first amendment, it will be, if the justification is correct, it will be accepted, and that will suspend the activity. And then you have to have a second amendment to restart the activity and to make the cost again eligible. Okay, so that's the logic. It's relatively logic, and the grant agreement explains well the procedures, and the IT system also is set to have that automatically done via an amendment procedure. Next slide. Alors, there is also the possibility that SINEA initiate the suspension. So here it's really initiated. So basically what we do, this is rare, really rare, is when we have some suspicion or evidence of fraud, substantial error, really breach of obligation of the grant agreement, that we may inform you of our intention to suspend the grant agreement while, for example, we do some investigation. Okay, so here there is a full procedure where first we pre-inform you. You have a time to reply, giving your observation. So either we continue with the suspension procedure or we discontinue the procedure. Okay, but anyway, that's the way it's done. And of course, if we do suspend, following our initiation, we confirm the suspension, you will have to relaunch, or will lift the suspension after the time, if it's the conclusion of our investigation, for instance. And we will ask you to request an amendment. Why? Because we know that after a suspension, you need to take some, to think again about the project and potentially to have some changes, for example, the duration, because you will have to add the time of the suspension, for instance. But there could be also other consequences of the suspension that would have to be included in the new amendment after the suspension. Here again, even if it's SINEA initiating the suspension, no costs are allowed during the suspension time. Next slide. Okay, so now we go to the beneficiaries termination. So why a beneficiary would terminate his participation? Well, sometimes it's because they want to. Okay, there is, for example, a change of business model, or some strong issues within the partnership, and sometimes it's because they're bankrupt, so it's beyond their wish. So all those reasons may have there is a necessity for a beneficiary to either request himself the termination, or for the consortium, the coordinating beneficiary on behalf of the consortium, requesting the termination of a beneficiary. So it can be also is that the terminator, the coordinator, sorry, is terminated. So in that case, it will be the rest of the beneficiary introducing the request of termination of the coordinator beneficiary, if this coordinator beneficiary is not in condition to ask himself his termination. Its termination, sorry. So it's done via also, it has to be requested as soon as possible. When you know that a beneficiary stopped working on a project, it's important to initiate the termination as quickly as possible, okay? One thing which is also important, and I will come that a bit later, is that this termination can question actually the whole grant agreement. For example, you have a beneficiary who has a major role in the grant agreement, and this beneficiary is bankrupt. So this might lead to a termination of the grant agreement. So because you don't have any alternative to that beneficiary role in that specific grant agreement. But of course, this can happen, but this can also be completely different. Next slide. So it's done by via amendment again. So amendment is really a workflow in the grant management system. The launching of an amendment, as you say, is also used to request a beneficiary termination. Okay, and in most of the case, you can have either one amendment or two amendments. Why? Because you can have only one amendment where you will mention the termination and also introduce all the modification that is the consequences of the termination of that specific beneficiary. Or if you can't do that in one amendment, you might have to do it in two amendments. So first, you initiate the termination. So you have a first amendment limited to the termination. However, please note that we expect to have a second one because we need to understand how the project will be able to continue without that specific beneficiary. Okay. So it's really important that you keep that in mind. Of course, efficiency would say better to have one amendment, but we do realize that sometimes it's not possible. Okay, next slide. So just one thing which is important is when the beneficiary is terminated. So when you request the termination of the beneficiary and when you submit your amendment requesting the beneficiary termination and possibly other changes. This I was clear during the presentation on the 4th of October. The termination is effective, so you can't revert back. The beneficiary is terminated, even if we, for example, disagree with your alternative setting of the consortium. Still, this beneficiary will be terminated. So we may reject, for example, the amendment because we consider that your alternative is not good enough because question, for example, the implementation of the question too much the project. However, the beneficiary will be terminated. Okay, there is no way back. The only way back is to ask it again in the consortium. What is also important is that we need to have the opinion of the beneficiary concerned. Or at least the proof that you requested the opinion and they did not reply. If the termination concern the coordinator and it's done without its agreement, then as we said before, as I said before, it can be done on behalf of the other beneficiaries, acting on behalf of the consortium. And I can say here there is some legal implication, and therefore we need to have all the justification there. One thing which is also important is there is always two dates when you terminate a beneficiary or a grant agreement. There is the date of the end of the work. So after that date, for example, this beneficiary stopped work or will not claim any cost. Okay, if he claim any, but actually he cannot claim any cost after that date. And there is the actual termination date when is the date when the amendment is submitted, actually. And that's the last point about improper termination, is exactly what I said before, is that imagine that you terminate and we do not agree about how you deal with the consequences of that termination. This is improper termination, and there are some impact there, that either we terminate the grant because we consider that the situation is no more it's conducive to a proper implementation, or there is also the reduction of the grant, which is a specific Article 31. Next slide. Alors, what next? So this is also important. This is well explained in the grant agreement. And here I just put words there. So what is important is that when a beneficiary is terminated, he has to report on the work that has been done. We don't wait until the end for the report of that specific beneficiary. It's important that it's reported. He has 60 days, this beneficiary, to submit a technical report and to submit financial statement and also a certificate on financial statement if necessary by the voilà, he has to do that, and we will assess that report and after the submission. What is also important is that the coordinator must prove that he has actually provided some of the pre-financing to that specific beneficiary. If not, we consider that this beneficiary did not receive any pre-financing. Okay. Voilà. So, and exactly what if it was not submitted before, we also expect a second request of amendment to explain how you deal with the consequences of the termination. Okay, next slide. Next slide. So now we are at the grant agreement termination. So this is requested by the consortium. This is not that rare, actually. Well, it's not common, but it's not that rare that the situation of the project implementation is so different that, for example, it makes it irrelevant to implement the action. Okay, or that, for example, if you had a suspension with some impact very strong on the project context, for example, that you never have again let's say the context to implement the grant as foreseen. Therefore, you have to terminate. You have to request for termination. Again, it's requested via an amendment requested by the consortium. And it's important that you do, if you think you are in this situation, which is unfortunate, of course, and that you actually request the termination, because we should not be in a situation where you are just stopping working while the project is supposed to continue, and where at the end we will consider that the grant has been terminated improperly, which has some consequences. So if you are in a situation like that, of course, contact your project advisor or first your CNEA external monitor, your external monitor, to explain the situation. Next slide. Next slide, please. Voila. So so when you start, when you launch a grant agreement termination, I'm not sure. Can you go to the slide before, please? Okay. Yeah, one thing I haven't said, which is really important, is when you submit your grant agreement termination, as for the project, the beneficiary termination, when actually you submit the amendment, it's done. We can't go back. It cannot be undo. Okay, so you really have to think before submitting a grant agreement termination. Next slide. Thanks. Yeah. So here, so we are at the situation where the grant agreement, it's terminated. So you have 60 days. So to submit your report, your final report. It's important that you submit it as a whole, and that you cover all the period until the termination. And you might have also a financial statement, certificate, as for a normal final report. Okay. If you don't submit any of that, we suppose that you do not have any implementation and that we will recover the first all pre-financing that we would have. Next slide. Next slide. Yeah. So here we were in the situation where before, where you consider that you have either to terminate a beneficiary or a project. It can happen that we have also some ground actually to request either the termination of a beneficiary or the termination of a grant agreement. It's rare that we are under this situation, but it can happen. It can happen, for example, if we really consider that a termination of a beneficiary and all the amendment that you have submitted after to try to mitigate with this termination of this major key beneficiary, none of those alternatives are actually convincing us that the project will be implemented as before. Therefore, we might have to consider that a grant agreement must be terminated. Here, it's like the suspension. It's not done unilaterally without giving you the opportunity to provide us some observation. But so we will send you a pre-information letter. We will explain the situation. We will give you a list of arguments, our intention, the reason. You will provide us, if you think it's important, the observation. And therefore, we will assess those and we will either ask more questions or take a decision. Okay. Just for you to know, for the coordinator to know, for example, if we have some ground targeted to a specific beneficiary, we will have the communication with that beneficiary. Okay, this pre-information letter will be sent to that beneficiary only, and it's only at the end of the process that the coordinator will be informed. This is probably because the ground for those type of termination is linked to some specific irregularity or suspicious of fraud. Next slide. So the effect. So the effect is that as before, we will have to calculate the final grant amount and the final payment based on the information that we have. So you must submit the periodic report until the end of the end date, the end of work date. And as before, we expect you to do that, because without that, we have nothing to judge. There is a specific case here in Orange that we might also initiate grant agreement termination for your obligation, because of the consequences of breach to your obligation to submit report. So this is a specific case. For example, you have to submit a report, a periodic report, and you are completely unresponsive. Okay, and so we ask you first time, we ask you second time, so we remind you of your obligation to report, and you do not report. Okay, so the escalation, I'm sorry, because this is what it is, will be to tell you that we are now entering into a grant agreement termination. And at the end of that procedure, so it takes time and you have time to react and things like that, and to submit the report. But if you never submit the report, after a time, after the end of the termination, we will not accept any report. Okay, so therefore the consequences is that we will consider, even if you finally submit something, we will not look at it. So when you are, usually it's super rare, it can happen, but it's super rare to have unresponsive consortium. But in that case, you have to be careful, because at one stage it will be too late. Next slide. For the beneficiary termination, here it's a bit like if it's requested by the coordinator. It's important that this partner submits the report, the financial statement, all this, and we will assess it, and all the payment related, the potential payment or action related to payment will be taken at the following periodic report, not immediately. And as it is written here in yellow, it was also the case for the other case, the information on the termination report of that specific beneficiary will have to be included by the coordinator in the overall periodic report to be submitted with the next periodic, at the end of the next periodic period. Next slide. Voilà. So here it's I think my last slide. So it's only few points which are important also and specify in your grant agreement. So the any termination does not affect the granting authorities or CINEA right to reduce the grant. So basically to consider that some, due to improper implementation, for example, part of the grant is not implemented and should be reduced, and the grant amount, or to impose administrative sanction. So please have a look to those specific articles. You cannot claim any damage due to termination by us, by CINEA. So that's clear. If we consider that the termination has to be done, you cannot claim damage. And even if a beneficiary participation is terminated, they are still bound to a number of obligations which are listed here, especially the one on the audit, which is very all the checks and review. Voilà. Next slide. I think that was my last slide, and we can have some time. I don't know if we still have a lot of time, but a bit of time for the question and answer. Thanks a lot for your attention. Okay, can I ask Lishinia to tell me how long do we have?
So we are now at 12:37, so 12:40, so we have around 17 minutes, 18 minutes for questions.
Okay, thanks. Okay, so that's the first question. Alors, là, a lot of questions from previous session remain unanswered. Are you going to address them in a fact doc that will be made available to all participants? This is for Anne.
Well, I will say that we will first look at the questions. Those that can be found in the annotated grant agreement, we will probably not answer separately. But for the others that cannot be immediately found, we will make sure that you can either download them from where you download the rest of the documents, or we can also send them to the participants later on.
Okay, and just make sure that you have your mic correctly positioned. Yeah, thanks. But we heard you. Thanks a lot.
Thanks.
So if we organize a course on management of live project, can we invite some representative of CINEA to participate? Here, I will also give the floor to, but it's a bit difficult to answer to that question, actually. I don't know.
Well, normally, yes, I can say that normally we need to make sure that we treat all participants in our grants equally, and we have limited resources, so we try to participate in all the events that are organized by the agency, sometimes also in other events, but individual events that are set up that we cannot do because we just don't have the resources for it. What we will do is make available like slide sets and so on that can be used. And if you have questions or you ask questions up front to your participants in these sessions and you don't know answers, you can always ask them to us, either through the monitors or the help desk or through the project advisor or project financial officer. And then we will try to answer them.
Thanks. Is the reduction of the amount of subcontracting and consequence shift to another other cost category possible without an amendment? My answer is yes. I don't think it's require any amendment. Clearly not, and not even a simplified approval procedure, I would say. It can be, you can mention, for example, when you report on the specific work program where this specific subcontract was foreseen, you can maybe mention it. But if it's only the reduction of the amount, no, it's you actually report on your actual cost. What is important. A consortium agreement is needed. We and other Life I project ask within your network, do you have experience on that? Oui. Alors, can you provide us a template? We do not have template of consortium agreement, but yes, indeed, I do confirm that consortium agreement is needed. So you can have, in the grant agreement itself, you have the list of elements that can and must be touch upon in this grant agreement. So you can already have looked to that. And you can also look to the fact that we had under the website, the fact that is normally for the applicant, we have here a link to a model in a different program that you can have also to as an inspiration to your grant agreement. But it's really it has really to be, let's say, tailored to your conditions. So you can take inspiration, but you should really make sure that you and all the consortium member are comfortable with what is written in the agreement.
Maybe I can just add that you just need to make sure that this consortium agreement is back to back with our grant agreement, because you cannot have different conditions that are conflicting with our grant agreement.
Indeed. Is an amendment needed if there is a new subcontracting item without significant change regarding the DOR? For instance, an external assessment unforeseen. The answer is no. However, it requires a simplified approval procedure. So basically, you need to signal us that deviation. You need to tell us that you have a new subcontracting item. And the other possibility of requiring an amendment would be if the amount here is so huge that if you have a limited subcontracting clause, which most of you have, that would go above the 30%. There, yes, you need an amendment. If you don't have the amendment, this cost might be considered ineligible. Anne, do you want to add something?
No. It's what you said. So they should observe the total amount of subcontracting and the threshold of 30%. And if they don't have, if they still have the limited subcontracting in their grant, we may need to change it.
Okay. Price of vehicle plan has substantially raised. The beneficiary can now only consider second-hand purchase. Should this be approved in advance? What procedure? Alors, for me, Anne, you want to say something? Because for me,
Yeah, I can just say that even if the price is more expensive, if this vehicle is needed for your grant agreement and you still want to purchase it, then even if the price is higher, this might still be an option if you consider a second-hand purchase, but you still you already foresaw the purchase of this cost, the purchase of this vehicle in your budget, then in principle, nothing needs to be done. So it's up to you if you purchase a second-hand or a new one. If the price would be really extremely high or so much more than initially foreseen, then I would maybe contact the help desk first or your project advisor to double check what the best option is for your grant.
yes. The PowerPoint mentioned, this I will talk to you, Anne. It's a question for you. The PowerPoint mentioned a limit on percentage, the 10% or the 50,000 euro, above which an amendment is necessary to add unforeseen subcontracting. Where are the limits defined? I can't find it. Actually, yes, they are not in the grant agreement.
It's in the call text.
It's in the call
text. In the call text,
Mm-hmm.
there is an indication of 30%.
No, not the 30%. No, Lucia, it was not the 30%. It was the fact that, for example, actually this limit, just so this limit, it's, for example, if you have an addition of a subcontracting which are below the limit, you don't even need to do a simplified approval procedure, because this change in the subcontracting is so small that we consider this being a minor deviation, which does not require any prior information. Okay, that's the 10% in the subcontract, or the 50,000 euro.
I think you can just put it in the budget section if you do your reporting, and then normally this will be approved if you want to make it visible. I would still suggest you put it there, but if you put it in your reporting later on, if it is limited, the increase or if there are new things, then you can just put it there.
Yeah. Do changes in staff member requires an amendment or a simplified procedures? None of them. No, you implement, you are responsible of your project team, and you do not have to tell us actually. If a beneficiary needs to incur expenses in an action or work program not provided for his budget, can the beneficiary report them without requiring an amendment?
Yeah, I think it depends on the type of cost. So because for some cost categories, as we already mentioned, you need an amendment, like for volunteer cost and third-party financial support to third party. So if there are other type of costs, then it depends, like for subcontracting, in some cases, you may need to inform us upfront. But otherwise, no changes in budget, or if it are important amounts, then you should put something in the budget section in your reporting.
So I'd like to propose. Alors, first, CINEA is not the one making the rules. This is one thing I wanted to say, but actually it's a very valid point. And I mean, we are perfectly aware that all those rules are not easy to implement. I don't know if Anne wants to say more on that.
Yeah, it's also that we are bound by the rules that are for the the master grant agreement is something that is put in place by the Commission. I mean, the conditions are similar to most of the programs. So we have not a lot of impact on these things. For us as well, we struggle with some of these things. We try to find out. This is the reason also for the calculation sheet of the staff costs that we have tried to put in place to help you. We know, and we are very well aware that it is a little bit challenging for you, but we can only answer your questions when you have them or support you when there is a need to help you to come and to overcome the issues. But since you are getting a lot of public funds, so there need to be rules, and it needs to be also transparent how these costs are incurred, and it should reply to all our eligibility conditions. So in that sense, all participants are the same. So, but we are there to help you.
Thanks, Anne. So does the entrance of a new associated partner require an amendment, or is it possible to simply update the AP information on the portal, the associated partner information on the portal? Here, although associated partner do not claim costs, they have a role in the action. So I would say that if you have an associated partner that was not foreseen as participant before, and its role, the role of that entity is important, for example, in the implementation of your project, yes, you may request an amendment to have that partner clearly associated to your project. Voilà. So that's so you will mainly amend the Annex 1, which is the description of the action. However, if it's very minor role, you can also not have the amendment, and when you report, you can mention that, for example, some of the activities were implemented with the support of an entity, which is this entity, which is like a stakeholder. Obviously, this entity will not claim any cost. Voilà. So, I mean, this is really depending on the situation. It's a bit difficult to give you a straight answer here. The change of a project legal signatory is considered change of legal data. Actually, no, but it's considered you have to manage those roles linked to the project via the funding under the portal. So you enter there and you have different action possible linked to your project. And one is manage consortium, and this is where you would allocate and edit the various roles of attached to your project. Obviously, the legal signatory should be that you want to use for that specific project should be part of the person having the possibility to be legal signatory of that specific entity. And here, I really recommend you to have a thorough look to the guidance on the portal, which is really clear on how to edit those roles and how to make the project representative always updated. There's a change in project site, restoration site requires an amendment if they are still located inside the same Natura 2000 area. Those are clearly things that might or might not require an amendment. And it's really important for that specific question that you contact your external monitor, the project via the monitoring helpdesk. You explain the situation, you give them as many information important, and you explain also the consequences of this change of the restoration site. So the external monitor can screen your request and also consult the project advisor and will come to you with a specific guidance on how this change that can be either minor or major, depending, so I can't answer, but this you have to inform the external monitor and CINEA, okay? That will inform also CINEA. Subcontracting below 30% of, is it 30% of total eligible costs for the specific beneficiary? Here, no, it's project, huh?
Yeah, project.
Voilà. It's at the 30% of the project. So it's as I said, really a high threshold. What is the threshold of lump sum change that requires amendment?
I think we don't have lump sums for the moment, I think in none of our grants. So this might come. So for the moment, there is no threshold.
Okay. I think I already replied to does the addition of associated partner no budget requires an amendment? Depends on the role of this associated partner will play in your amendment. As I said, you can do without it, but if it has an important, really significant role, it's better to at least ask the question. What to do if the company will change its size from SME to big company during the duration of the project? I think this is a change in the legal data, if I'm not wrong. So basically what you do, you go to the participant portal and you notify the change there, okay? And you will see what the REA validation service requires, if they require any additional information. And this will be, if it goes up to the end, that will be what we call the information procedure, which will be an amendment, but without CINEA involved in it.
Nadia, I think we reached the time, 12:55. I don't know if you want to take a last question or we pass the word to Hans. It's 12:55.
Maybe I can ask the last one, making sure I understand this correctly. An amendment of the budget can never entail an increase of the total budget.
Well, the budget can be increased, of the total cost can be increased, but you will not receive more EU contribution. Voilà. So that amount is limited.
Exactly. So thanks a lot to all of you. And as for the financial part, we will look at the remaining question. And if there is no immediate answer in the annotated grant agreement, we might include them in a document. And I'm handing the floor to Hans. Thanks.
Thank you very much, Nadia. I would just like to close this financial session of the 2022 Welcome Days. And thank you and thank all participants on behalf of Anne Burrell and myself, so respectively the heads of unit of the two operational units of LIFE, so LIFE Energy and Climate and LIFE Environment units. So thank you very much for that. I've seen that there has been a great interest in these financial session today again, with I think over 1,000 connected colleagues. I hope this has been a very useful half day for you again. 4 hours on both financial sessions and contractual aspects and amendments. And I've seen that there has been a great number of questions and clarifications provided. So for us, this is very, very important to give you a good head start and a smooth start into the project management. Because this avoids issues later on in the project that we would like to avoid, both for ourselves, because it involves a lot of work in clarifying issues at the end of the project, but also to you, because we don't want to see a lot of ineligible costs being claimed at a late stage because amendments were not properly treated, or because wrong information was informed. I understand that on the financial issues, there's a lot of question on the issue and reporting on personnel issues. I hope some clarifications have been was able to be provided by the colleagues through these welcome sessions. But I just want to encourage you to regularly go back to the presentation that has been shared, and go back to all the resources that are available, and the questions and answers documents that are already available online to clarify issues. But if there are still issues, both the project advisors and the financial officers are always available. And for those projects who are managed also by monitors, you can also obviously use the services that are provided by Elman in order to clarify any financial or contractual issues that you have. So with these words, I think it remains mainly for me to thank the great efforts of both Anne Vermalen, Virginia Pereira, and Nadia Lamandas for having presented and spent a couple of hours clarifying questions of all the participants. So thank you a lot for the presenters for this session. And with these final words, I wish you all a good day and have a good lunch. Thank you very much.